Welcome back. You're watching us here on Chartbusters from one company which has cash equivalent to its market cap. Let's talk about another company which also has cash, but that's roughly 50% of its market cap. CarTrade Tech posted a strong set of the second quarter numbers. Let's bring in Banwari Lal Sharma, who's the company's CEO of the consumer business, to discuss their earnings and importantly what they plan to do with their cash for going forward. I mean, we'll talk about earnings, etc. And the reason why I asked this as the first question is because just before we ended the previous interaction, 1,100 crores of cash on the books of Kalyani Steels for a market cap of 1,300 odd crores. Your market cap anywhere between 2,800 odd crores with 1,000 crores of cash. You have said that the immediate utilization for this cash is, to look for investments and acquisitions. Can you tell us at what stage of discussions are you with various opportunities, if at all you are at one?
Good morning, Mangalam. So, of course, I wouldn't be able to disclose exact details on that, but you understand it's a phenomenon which will happen over a period of time. The cash is there, quite safe. I've been talking about it quite often. And we are churning cash every quarter. We are earning, let's say, more, and that cash is only getting more and more. The opportunities for us are very important. We want to be in a synergic space. So we don't want to go out and, let's say, invest into companies which have nothing to do with the business that we are in. So that's the fundamental thought. And until and unless we find a synergy of that order, wherein, let's say, the company, the management, let's say, people, they align with our thoughts, let's say, we can work with them for so long, etc., we would be very patient. Discussions keep happening all the time. It's just that I can't give you details, Mangalam, where exactly we stand today.
No, well, the reason I asked you that is because, you came with an IPO at 1,600 odd rupees. Right now, your share price is less than 500 rupees. Are you tempted to buy your own shares with the cash that you have if you don't have an immediate acquisition plan on the anvil?
I won't be into any such details, Mangalam. Again, I'm sorry. You understand more than this. This market a certain way, organizations, behave in a certain way. I can tell you for sure, and this is not the first time coming.
Oopsie.
Right,
Mr. Sharma, I think we've got you in a bit of a scratching line. Let's try again. Mr. Sharma, you're making a point about the utilization of cash in your books. You said you don't want to make any irrational investments. To that, our counter question was, why don't you invest in your shareholders? They have been with you through all this pain. So why don't you utilize it? Maybe give a one-time big dividend to keep them interested. Maybe do some buyback of shares. What's your response to that?
It may not happen, Nigel. To be very honest, as I said, we believe in what we are doing. We believe there is something really big, let's say, for the future. We are here for the very, very long term.
Yes.
So 1,000 crores in bank or 2,000 crores in bank or whatever, it doesn't matter. If giving a dividend is the right thing, we'll do it. If, let's say, giving buyback is the right thing, we'll do it. But we believe let's be not in a hurry. Let's not really go out and, let's say, take an action which is to, let's say, please somebody, or let's say do something which is in a panic. We would do it when it is required to be done. For now, we are focusing on building great business, and our numbers have been testimony of that.
Let's talk about business then, Mr. Sharma. What's the sense in terms of the outlook? The first half of the year, we have those numbers out, yeah? The first half, in fact, revenues are up 30% odd at around 170 crores odd. Second half of the year, what should we be looking at?
So if you look at, again, we as an organization don't give forward-looking numbers, but I'll talk about the industry, which gives you perspective. You can take new car sales as an anchor for, let's say, businesses like us. The first, let's say, 6 months of calendar year, this year, India was selling something like 3 lakh cars, let's say, a month. We moved to something like 3.3 this particular quarter, which has, let's say, gone by. And October was not very different. October, Diwali came around 24th, 25th. And that's when, let's say, typically I'll tell you a couple of good things which will give you confidence about organization and its business in general. That every year, festive is typically a peak. You go to a peak and then you fall 20% approx, let's say, 3-4 weeks after that, and then start building all over again. This particular year, the fall is just about 8-9%. In fact, one interesting thing happened, which I see now in our business, in cars business especially, the festive curve, the seasonality curve flattening a little. So typically Shraddh period, which is before Diwali, those 15 days, people would not really buy cars. They would just sit tight and then they would buy once the festive is over during Navratri or let's say Dashera and then Dhanteras. It didn't happen this year at all. I mean, people, the entire Shraddh went by like it never happened.
Right. So
Same is the
that means short point demand is extremely strong. People are estimating anywhere between 20 to 25% new vehicle sales in this year itself. Just wanted to understand from you, from a macro standpoint, at what rate of the industry do you typically grow? Because new vehicle sales this year estimated anywhere between 20 to 25%. Do you grow 1.5 times that, or 1.2 times, or the same as new vehicle sales growth?
So you understand that we are in a gamut of businesses within that industry. So new car business is only a part of our business. We have new bikes industry, and then we also cater to used car industry. I can tell you that used car industry, I mean used car business for us is the fastest growing one. New bikes, which was a quite nascent business for us, we only incubated Bikewala in 2012, and we started monetizing something around 2018. Is the second, let's say, fastest growing business, and then comes the new car business, which is quite aligned to what you just talked about.
Okay.
Industry would grow about 20% over the COVID period, but I think this will taper down a little going forward. But India should still grow at about 9, 10, 11% on the new car business for a couple of years at least.
Okay, all right, Mr. Sharma, we would like a few more numbers about your business, but we look forward to having a chat with you next time, and I'll be interested to know what's the plan with the cash. That's the one that's supporting the stock, so that'll be quite interesting. But good speaking to you today. For the time being, we'll slip into a short break, come back, continue our focus on markets.